And you, Tim, thanks for having me on board, and thank you for everyone for your attendance. So yes, as Tim mentioned, Synovic's project in Europe, in the Czech Republic on the border with Germany, a historic underground tin mine that stopped producing tin back in the late 1980s, after the wall came down, but with a very, very large lithium endowment. If we can please have a quick look at the disclaimer and then move on to the next slide. Thank you. So, important distinction, Synovic will be a fully integrated battery chemical project. So we're not producing a concentrate, we're going through to final product of either lithium carbonate or lithium hydroxide, depending on the demand equation. We can produce both of those precursor chemicals to battery grade. We've done that previously, independently verified. Right now, we're in the process of some lock cycle work, some pilot plant work to produce battery grade samples, which we'll be able to then use with potential off-takers. But Synovec, as I mentioned, it's a very large endowment of lithium, largest hard rock lithium resource in Europe. And an important distinction is it's by far the largest hard rock lithium resource in the EU. And if we click over to the next slide, please, we'll see why that is so important. So the demand for lithium in the European Union will grow faster than anywhere else in the world in the foreseeable future, and there is currently no supply whatsoever. No battery-grade lithium produced in Europe whatsoever, in a region with massive demand and massive increase in demand. The European Union is fully committed to the green energy transition, fully committed to building a battery industry, fully committed to an electric vehicle future. And you'll see some of the numbers on this slide definitely indicate that. There's a massive financial commitment, and that's now being backed up with a significant legislative commitment, as we'll see on the next slide. Right now, we are actually waiting for the final release of the European Union Critical Raw Materials Act, which was slated for release at the end of May. So we're currently a couple of days late, but we expect to see it very soon. And the Critical Raw Materials Act is effectively Europe's answer to Biden's IRA. It's trying to help redress the balance of giving the sort of incentives to projects exactly like ours in Europe, the same sort of incentives that are now being given to these sorts of projects in the USA. Europe has been slow, it's fair to say, slow to move on this, slow to recognise the necessity for developing its own critical raw materials. But we believe this act that we're awaiting will go a long way to redressing that. The draft legislation talks heavily about further financial subsidies for projects like ours. It also talks about legislative changes to speed up the permitting process. Both of these are very important. Our project has already received one grant from the EU via an entity called the Just Transition Fund, that you'll see on the right-hand side of this slide. So the project has been pre-approved for an amount of approximately 49 million euros, and that's money we'll start tapping into later this year for some of our early works programs. Importantly, given that we've already received the grant from the EU, we are already in the system. The project has been designated a strategic project under the Just Transition Fund, and that puts us ahead of any other mining project in the European Union, as we're the only one currently with that classification. The next slide, please. Project is the gold star in the middle of this slide, in the middle of Europe, really. As I say, Czech Republic on the border with Germany. But interesting, you'll see how many gigafactories there are surrounding us. These are all of our customers and the OEMs. You know, we don't envisage moving in product any further than 200 or 250 kilometres from our processing plant. Makes a big difference to our costs. It also makes a big difference to the carbon footprint of the project. The project has very good ESG credentials, which I'll touch on shortly. If we can have the next slide, please. So, overhead view, the gold. The blue circle or oblong at the top of the slide is the Synovec ore body on the border with Germany. This is on the Erzberg Ranges, historic mining area, mining both sides of the border. And you'll see further below that another blue dot, which is our plant site, proposed plant site at Coughlan. This is where we'll be processing the concentrate into battery-grade chemicals. And further south of us, you'll see some old historic coal pits owned by our project level partner, CEZ, the Czech National Power Utility. We'll be using our tailings to help rehabilitate some of these old coal fields. Now, the Just Transition Fund that I mentioned earlier is a fund established by the EU to help regions previously dependent on the coal economy to transition to green energy. We are exactly in that area. We'll be training former coal miners to become underground lithium miners, and as I say, we'll be using some of our tailings to help rehabilitate some of the coal fields in our area. The Just Transition Fund has been funded by the European Union to the tune of 40 billion euros. So the EU is quite serious about that. Their big numbers have been thrown around. Next slide, please. Excuse me. I mentioned earlier the significance of the size of the Synovets deposit as part of the EU. So if you add up all of the hard rock lithium resources in the EU, Synovets accounts for over 65% of it. This is important for two reasons. It goes to long-term security of supply, but it also helps focus the EU's attention on our project and on helping us bring this project into production as quickly as possible to meet the very real supply-demand gap in the region. Next slide, please. This is our simplified flow sheet that we're currently doing that pilot work on right now, as I mentioned. So as you can see at the bottom, we can produce either battery-grade lithium carbonate or battery-grade lithium hydroxide. We can also produce lithium sulfate, which is an interesting precursor chemical. And we also wanted to prove we could produce lithium phosphate. There is a move, as Cameron mentioned in his opening address, a strong move towards LFP battery technology, particularly in Europe. And we feel that lithium phosphate might become an interesting option as a precursor chemical for LFP batteries. Excuse me. Next slide, please. I mentioned the ESG credentials, they're very strong. We had a formal LCA conducted on the project about 18 months ago by Minviro, showing potentially some of the lowest carbon footprint profiles of any lithium project anywhere in the world, but not only a low CO2 footprint, but very low water usage, very low acidification. All three of those are very important for us in the final ESG assessment. But we are entering a historic underground tin mine. So clearly much less impact on the environment, much less impact on the community. And we've taken great steps to ensure that our ESG profile is very strong. We've been running baseline studies for 4 or 5 years now. The ore transport or the concentrate transport method that we've used is the lowest impact possible. We won't be running trucks or trains through the communities. We'll be moving the concentrate from the portal down to the processing plant via a rope conveyor system above the forestry, and therefore having very little impact on the environment. These things, ESG credentials, are important the world over, but particularly important somewhere like Europe, where you obviously have a high population density and where you have a great deal of focus on the impact on society of mining and other processes. That Coughlan mine site that I showed you in the overhead slide is an area that's already designated industrial usage, and that's why we're putting the plant there and not somewhere closer to the portal. Next slide, please. Our most recent formal numbers on this project are now about 18 months old, being updated with our definitive feasibility study that will be concluded in October of this year. But I just want to highlight the robustness of the project, bearing in mind these numbers are 18 months old. But on these numbers released in January of last year, the project has an after-tax NPV of nearly $2 billion, an after-tax IRR of over 36%. So very, very robust economics. Interesting to note that NPV has been calculated using a lithium hydroxide price of $17,000 a tonne. That's 1.7. Clearly, the price is significantly higher than that now. So that NPV will grow considerably. You'll notice on this slide the CapEx, which was estimated at $650 million 18 months ago. Clearly, with what we've seen in the world with inflation over the ensuing period, there'll be some upward pressure on that. But we have managed to take some costs out of the project with our optimised flow sheet, the one that was announced October, November last year, and that I just showed you the flow sheet for. So although there'll be an increase in that CapEx, we don't expect the sort of blowout that might otherwise be evident. But in any event, any increase in the CapEx, I think, will be more than mitigated by the increase in the lithium carbonate or lithium hydroxide price that will ultimately be selling to. Clearly, there's a great deal of demand for this product in Europe. All of the European OEMs are very keen on securing local supply. Another of the tenets of the Critical Raw Materials Act, or at least the draft that we saw, was the desire from the European Union to see at least 10% of all the battery metals consumed in Europe by 2030 to be sourced in Europe. For lithium, that would account to about 120 or 130,000 tonnes of LCE, and that, as I say, coming from a zero base. So we believe that this project can help hit that target more than any other project being developed in the region. We're excited about what the next 6 to 12 months hold for this project. Next slide, please. From a timing point of view, I mentioned the definitive feasibility study. That'll be concluded by October of this year. We'll be able to move quickly to final investment decision from there, subject to our final permitting. And we do believe that we'll see a speeding up in the permitting process as a result of the Critical Raw Materials Act. The other things we need to do, we're finalising discussions with off-takers. We look to be able to announce that, talk about those things publicly within the next few months, along with putting together the financing solution for the project for that CapEx. There's a great deal of support at a high level in the European Union to bring these projects on. People like the European Investment Bank and others are very keen to see these projects progress. As I say, we've already received one grant via the European Union, and we think that the final version of the Critical Raw Materials Act will pave the way for further public money, further grants, and speeding up of this project. So looking forward to developing the largest hard rock lithium resource in a part of the world where the demand for our end product is going to grow quicker than anywhere else in the world, and very happy to take some questions. Thank you.
Thanks, Keith. A couple of questions here, quite a few actually. One question is, can EMH target a high production rate given the growing demand in Europe for lithium?
Yes, the short answer is yes, Tim. So even though it's a very large resource at 7.5 million tonnes, our phase one annual production of approximately 30,000 tonnes is quite modest. We do believe strongly that we can increase that dramatically through a number of factors. We are doing the work on it now. It'll be done as a phase two, a modular approach to an expansion, because we simply don't want to distract any way from the DFS that's currently underway. So we're very focused on getting that concluded, getting that business plan underway at 30,000 tonnes per annum. But I believe we'll be able to talk publicly within the next month or two about the potential for significantly increasing annual production from Synovitz.
And of course, you've got some political support. So you had the Czech Prime Minister kind of recently visit your project and made several statements of support for the project. How do you see that support actually impacting the development?
Well, it's crucial, really. The way that things happen in the EU, Brussels will bring new legislation into law, but of course you need the member states, i.e. in our case the Czech Republic, and to a lesser degree the member states, to embrace what Brussels puts on the table. And having the Czech Prime Minister go to site 2 weeks ago, I think is a great endorsement of the project, but also of the proposed legislation to come out of Brussels. And the fact, I think it's a strong indication that Prague, that the Czech government will embrace this legislation and help drive the project forward. And importantly, he then continued on from our project into Dresden, which is the capital of the German state of Saxony, the state bordering our project, and signed a memorandum of cooperation with the Saxony government that included cross-border development of critical projects, specifically talking about lithium and electromobility. But he then also tweeted that this development would significantly help the development of the Sinovex project. So we feel we have very strong support at a Czech government level, at a German regional government level, but also in Brussels as well. And it makes sense that the project would have that support.
Pete, that's all we have time for. Thank you for your time.
Thanks very much, Tim.
I might add there's a Corporate Connect research report on EMH available for download.